Hi, my name is Jackson Cromer, and I'm the president here at Bond Exchange. Today we're going to talk about why surety companies require financial statements for review. Before we get started, it's important to understand what a surety bond is. A surety bond is a three-party contract between the principal, which is generally a business entity, the surety company, and the obligee, which is the entity that requires the bond. The surety bond guarantees that the principal act in accordance with the terms established by the bond, which are usually a set of statutes or ordinances required for business licensing or performance of contract terms. Surety bonds protect the obligee from financial harm in the event the principal violates the provisions set forth in the bond form. Another important aspect of surety bond underwriting is the indemnification process. Unlike other lines of insurance, the bonded principal must repay the surety company for any losses resulting from a claim being made against the bond. The indemnity agreement holds the principal legally liable to repay the surety company for any losses they sustain as a result of a valid claim. Now that we know what a surety bond is and why the indemnity agreement is required, we can explore why surety companies examine financial statements. Surety companies will want to review financial statements for a couple of reasons. First, they want to ensure that the principal has the ability to repay them in the event a claim is filed against the bond. Additionally, sureties want to ensure the business is financially stable and does not pose a risk of going out of business. Surety companies will review items such as revenues, profit margins, working capital, and equity to determine the principal's financial stability. Now that we know why surety companies need to examine financial statements, we can explore when they'll actually take a look at these documents. Not all bonds will require a review of financial statements for approval. Bonds with a historically low rate of claims are considered low risk, and surety companies will not need to review financial statements to approve these bonds. Think of lower limit city or county license and permit bond obligations. Generally speaking, principals applying for a bond with a limit of $50,000 or higher will need to submit a business financial statement during the bond application process. Now that we have explored why and when surety companies require financial statements for review, we can examine the different types of financial statements that surety underwriters may need to take a look at. Depending on the size or risk classification of the bond requirement, surety underwriters may need to review business or personal financial statements to determine if the principal qualifies. If a surety underwriter requires business financial statements for review, generally they're going to want to look at two separate reports. First is a balance sheet, which is a snapshot of the company's assets and liabilities at a single point in time. This report shows what the company owns and owes. Second is the income statement. This is a report measuring revenue, expenses, and net income for a specified period in time. Generally, if the principal is applying for a large aggregate line or a large single bond amount, it's possible the surety may need to have the financials reviewed by a certified public accountant or a CPA. Lastly, a surety underwriter may require a personal financial statement for review. Personal financial statement mirrors the business's balance sheet, however only includes the owner's individual assets and liabilities. Over the past few minutes, we've explored what a surety bond is, why an indemnity agreement is required, why surety companies review financial statements, when they'll review them, and the different types of financial statements they may need to review. This begs the question, how can insurance agents obtain a surety bond for their customer? Here at Bond Exchange, we make obtaining surety bonds easy. Simply log into your account and use our keyword search to find the bond in our database. If you don't have a login, enroll with us today and let us help you satisfy your customers' needs. If you enjoyed this video, make sure to subscribe to our YouTube channel as we post weekly content helping insurance agents effectively obtain surety bonds for their customers.